Welcome to the presentation of Media and Games Invest. As mentioned already, my name is Paul, CFO of MGI, with the company now for 4 years. And we also have Sonia, our CIO, recently joined in April with a lot of backgrounds in investment banking. And if there's a question also afterwards, just reach out. And I will guide you today through the MGI story and the recent development. To start also right away here on the right side, so our CEO and chairman, Remco Westermann, who started that story in 2012, back in the days under the name Amigo, still holds 26%, so he started at 100% and then diluted himself due to M&A transactions and certain capital increases to build this roll-up story in the end. We have two very strong cornerstone investors on board, which is Oaktree, holding 30%. They also came in with a capital increase to finance a part of an M&A transaction in 21, and then we also have Janus Henderson and many long-only, especially also Scandinavian investors, as we listed the company also in October 2020 on the Nasdaq First North in Stockholm, and therefore also got a lot of very great long-only investors from Scandinavia on board. And this also proves that we have a very good access to equity capital markets to also finance a certain roll-up story, but for now we have said no priority on M&A, as currently capital has become very expensive and rather focused on integration of the existing assets, plus also further organic growth in the coming periods. That brings us to MGI in a nutshell. So MGI in a nutshell, as of today, is a leading European advertising software platform with a very strong access to first-party data from own games content. And the story started in 2012 as a game story, and we have transformed much more towards an infrastructure company now. And we mainly help games companies to drive user acquisition for their games, and on the other hand, also help especially games companies to monetize their in-game advertising base. And on the last 12 months basis, we did now 287 million in revenues, very strong profitability with 81 million, and a very strong growth also in the second quarter, despite macroeconomic headwinds of 37%, with an underlying organic growth of 18%, and the remaining gap is then coming from M&A transactions. We have now 800 employees across the group. Half of them are being roughly in Germany or Europe, half of them are in the US, and we have also a lot of operations in the United States, where we come later to in terms of revenue split. We had 131% ad spend growth in the second quarter, which means all the traffic which were going through our platform, and there we have a certain take rate, and that is then relating also to the 37% revenue growth. We have now more than 500 software clients, which is mainly blue chip companies, generating more than $100,000 revenues per year, and therefore have grown that base over the last years tremendously. And we also have a very strong retention rate of these software clients of 95%, so they stay on the platform and also scale over time. Looking at the net dollar expansion rate, which is in the end the cohort from last year, we saw stable rates now in the second quarter. Usually in the last quarters we have always been well above 100%, which then means the existing customers scale. But as we see some softness in overall advertising budgets in the market, we now have 98%, but we compensated that with a lot of new clients, and therefore showed a very strong organic growth also in the second quarter. That brings us now to the global reach of MGI, and here on the left side we see that 69% of the revenues is coming from North America now, which is by far our biggest market. 18% is done in Europe, with no revenues in Russia or Ukraine anymore, and 13% is rest of the world, which is mainly Asia. And we combine that revenue split with a very strong global reach. So we have delivered 625 billion ad impressions to end consumers on the last 12 months basis. We are connected through our advertising software platform to more than 2 billion end consumer devices, which we reach on a monthly basis. And we reach on a daily basis 250 million daily active users, which means we are super interesting for advertisers who really want to advertise their products on a global base. And we combine that very strong global reach with a lot of first-party data from our own games content, which is key in the world where the identifiers and cookies going out of the market. So we have more than 5,000 own games where we place a lot of ads in and drive also a lot of revenues. We have more than 20,000 mobile apps from third-party publishers, which can be Zynga, a King, which owns Candy Crush and these kind of games. And we have more than 1 million registered gamers on our own platform, where we have roughly half of them as active users. So we have a lot of data points where we can also push that data on a GDPR fully privacy compliant basis over to the advertiser to allow them to target for the marketing campaigns the right target group. Looking at the major events in the second quarter, and here we see that we generated a 76% organic growth on the demand side. We come later a little bit how the demand and supply side thing work in an advertising software platform. We added 25 new publishers on the supply side. So publishers are the companies where we help them to monetize their in-game advertising space. We have 2 new games which we will introduce to the market very soon. So Fractured Online, which is a PC MMO game, which will be launched by mid of September. And then we have Fantasy Town, which is already in soft launch. It's a mobile game where also the majority will be monetized by advertising. And both of them showing already quite good ratings and also good first results. Then on the financing side, we issued a bond of 175 million in the second quarter, despite a bit challenging markets in the end. And we also refinanced or rolled over 150 million of our bond, which is maturing in November 24, into a new bond, which is now maturing in June 26, and therefore also diversified debt maturities quite nicely. We have issued 300 million Swedish kroner to finance part of the Access Emotion acquisition in the second quarter. And that's roughly 30 million euros, so also improving our access to equity capital markets. And then we also did one acquisition, Access Emotion, also a few details later on. It's a mobile games company, and Dataseed, which is a UA, a demand-side platform to drive user acquisition for games. And recently have also sent out our notice for the AGM by the 15th of September, where we also included now the relocation of the holding of MGI from Malta to Sweden. So main operations are in Germany and in the United States, but the holding is still due to the reverse IPO, which we did in 2018, based in Malta, but that will be cleaned up by January 23, but still subject to approval by the AGM. That brings us to the transformation from a pure games company in 2012, where we started under the name Amigo, towards an advertising software platform. So from 2012 to 2017, we were doing roughly 20 M&A transactions in the game space, adding a lot of content, but also a lot of audience data. And in 2018, then we were putting an empty shell on top, got the first listing based in Malta, but listed in Frankfurt. And then also did a dual listing actually in October 2020, as we saw that the Swedish market works quite well for tech companies, but especially also for games companies. And in 2018, we then also decided to invest more capital into the advertising industry, because user acquisition is key for a games company to succeed, and also the monetization of in-game advertising space is super relevant to get the most out of the content in terms of monetization. And then in the last years, this growth of the media business has overtaken the growth of the games business quite a bit. So we started with 100 software clients using our infrastructure in 2020 and have scaled that up to more than 500 software clients, which making minimum $100,000 revenues per year now on a last 12 months basis. And if you look into the revenue per channel or revenue per stream, we see that 61% of the revenues is coming from mobile in-app, which is one of the fastest growing advertising markets in the world. 24% is coming from desktop. 30% is coming from connected TV, which is still small in Europe, but very big in the US. And also here, we are well positioned to take further advantage of the market growth. And then 1% digital out of home, which is not a very big business for us, but we also want to offer the advertisers all digital advertising channels and being a kind of one-stop shop, and therefore have also added digital out of home to our product offering. That brings us to the MGI flywheel, and here we have tried to put everything together which leads to the good organic growth which we have seen now over many quarters. And here we have the first party data, which is coming from our own games, but also from third party games which are using our software to monetize the in-game advertising space. And these data which we collect there gives us a lot of insights and a lot of data, which we then, via big data and AI machines and routines, collect, put into cohorts, and then pushing as an information over to the advertiser. And therefore the advertiser can then do very efficient user acquisition campaigns, and at the same point in time is also willing to pay more for the campaigns as he gets a lot of data. And that leads also to the fact that also the publisher, which has the advertising space, gets a better monetization support, CPMs per advertising space. and therefore it's a kind of win-win situation. And then we sell or scale the campaigns through our Verve DSP, which is a demand-side platform, and the publishers are connected to the Verve SSP, the supply-side platform. And overall, this creates a very good environment, and also the end consumer, which is watching the ads, gets more relevant ads, which means better conversion rates for advertisers, and in the end, also it's better for the end consumer. So in a nutshell, overall, more players in the system means that more advertisers also want to advertise in the content, because they, in the end, can do very efficient campaigns. More advertisers means more money in the system, which means also more publishers following the advertiser spend, and all this together creates a lot of critical mass and creates a very good organic growth, which we have seen now over the last quarters. Here on the left side, you see the market opportunity of MGI, and the digital advertising games market is on a combined basis 750 billion. It's grown with a CAGR of 10%, and we have grown now with 131% in terms of ad spend growth on our platform. So that's comparable to the 10% in the end. It also includes a certain amount of M&A, but also a very strong organic growth, which we have created through our flywheel. Coming now to the major asset or main asset which we have built together through M&A, but also by developing certain parts by ourselves over the last years. So here we see the full advertising value chain, which starts with the advertiser on the left hand. It's mainly third-party advertisers, but obviously also our own game studios use our platform to drive user acquisition. Then we have the demand-side platform, that's in the end a campaign management tool where the advertiser is putting these campaigns in. And then we have a data management tool, which is collecting all the audience data and build cohorts to really make very efficient advertising possible. Then we have the supply-side platform, which has a so-called software development kit SDK, which is implemented into the publisher, and there we can then place the ads. And overall, from every $1 advertiser spend, so we start here with €1, roughly 50% is reaching the publisher, and the remaining part stays in-house for MGI and is creating a very good take rate, which we can take from every $1 advertiser. That brings us now to our answers to the world of Postidentifier and the cookieless world. So we have in the end 3 solutions, and as you might know, Apple has recently introduced that the identifier is going out of the market, and therefore a lot of advertisers were flying blind quite a bit, or shifted actually also their budgets to Android, where there's still most like 2024 that Android will also depreciate the identifiers. And therefore, also many years ago, we have started already to drive a lot of innovation around these issues. So one of them, of the solutions, is actually Atom, which is a fully anonymized targeting solution, where we still collect a lot of data on the device, and then can build cohorts with it, but no IDs leaving the phone anymore. Then we have contextual data, which is mainly based on keywords and also some AI routines. And then the third pillar is actually the first-party data, which we have, which obviously, if the gamer gives a lot of consent so that we can use the data, is one very important thing in the world without identifiers to allow the advertisers to drive very efficient marketing campaigns. That brings us now to our own first-party games content, where we collect a lot of data. And as mentioned at the beginning, we have now more than 1 billion registered gamers on our platform, and have created roughly 60 million new downloads of our games just in the first half of 22. And we have 2 different types of games. So of our casual mobile games, which are mainly monetized via in-game advertising. And then we have our MMO premium games, which are mainly monetized via in-game item sales. And that's making the majority of the game's revenues. But the focus is now really on the casual mobile games, as we can monetize them quite nicely through our advertising software platform, and that's also one of the key focus areas going forward. Here's a few examples how we're keeping players engaged and how we drive revenues via advertising, but also via in-game item sales. So we're constantly adding new games to the platform. On the casual side, roughly 30 per month, so 90 per quarter. And that is also as we work with a lot of other developers together, which then provide us their games, and we pay a license fee of 25 to 30%, but we don't need to do the development by ourselves. And then we have the premium games where we own the IP of the majority of the games, and then in the end just add a lot of new additional content to keep players engaged. Player lifetimes of premium games is 5 to 10 years. On casual games, it's a bit shorter, but overall, very good sustainable revenues which we can create here. And on top, we also add constantly new game launches. It's always a lottery, and that is also something which we do mainly on licensed games, because we don't want to invest 5 to 50 million to develop a new MMO game from the scratch and then having the launch risk as well. So therefore we just take licensed games and keep the capex to a minimum. That brings us now to ESG, and here we also have done a lot of things over the last quarters, and there has been also a lot of announcements of MGI around ESG. So to start with environment, so all our servers now running on renewable energy, so we are also carbon neutral already since 2020. We do a lot of things, and like also the project where we're planting a lot of trees in the rainforest together with our players. So if they plant a tree in the game, we plant a tree in the rainforest. Then on the social side, we also work with the gender balance. Our new board is 50% male, 50% female. We have a lot of benefits which we also deliver to our employees, and always improving that part. And the most important part actually over the last quarters is governance. So the relocation from Malta to Sweden is one very big step towards the next maturity of MGI. And then we also, as we moving jurisdictions, we also need to change auditors, and now also have already announced that we proposed to the shareholders that Deloitte Sweden will become the new auditor in 2023. And in parallel, we are also implementing a lot of new governance-related things like an audit and remuneration committee. And what we have here today is also the proposed board, which will hopefully be approved on the AGM on the 15th of September. So we have Remco Westermann, currently our CEO and chairman, who steps down as the chairman but remains CEO. Then we have Tobias Weitzel, which will become chairman. He's on the board already for 4 years. So we also have some continuance here and making sure that everything will work very smoothly. Then we have Elizabeth Parra, which is an expert in capital markets, and Frank Ruhwedel, which will join the board then by mid of September. She's from Germany and has a lot of experience in audit committees. She's currently also on the chair of ThyssenKrupp Nucera. Then we have Mary Ann, coming from the US, a lot of experience in the advertising industry, and a lot of network there as well. And finally, Johan Rosland, someone from Sweden, who also has a lot of experience in governance and also in the games industry. So we will have a very strong board, which then also can take over certain further things like remuneration and audit committee, and also will work together with us on the next maturity of the overall organization. That brings us now to the MGI strategy. And in the last years, it was always buy, integrate, build, and improve, with a strong focus especially also on buying. But as capital now has become way more expensive, we have said, okay, M&A is not a priority anymore, and we also being a bit on the upper end of our leverage, and therefore rather want to delever now over time. But therefore we now will put the full focus on integrate, build, and improve. Integrate means realizing a lot of cost synergies between all the companies which we have acquired, especially this year, but also in the last year. Then build and improve. Here we also plan to further internationalize certain products. Maybe to give a few examples, for example, DataSeed had just one salesperson, and now we can provide him 20 different sales offices and scale this product globally. Also, Wizard 101, our biggest game actually, which was recently launched also in Europe, before it was just active in the US. So there's a lot of synergies which we can still realize of the companies which we have acquired, and therefore focus now on organic growth and delevering. That brings us to the latest 2 editions, and there has been also a presentation on the Capital Markets Day, which was last week in Sweden, with many more details, so I will just touch base on it very fast. So on DataSeed, it's a DSP, a contextual DSP, which was from day one built for a world without the identifiers. So the perfect market fit also to take advantage of the coming growth, as Apple has appreciated the identifiers. The organic growth of the company is outstanding with 63%. They have delivered already almost 18 billion ad impressions to end consumers on a last 12 months basis, and will also help us to further scale our own games. and that perfectly fits also to the Axis in Motion acquisition. Axis in Motion is a mobile racing game, or has a few of mobile racing games. They have created 800 million downloads without spending €1 in user acquisition, so all viral. And here also the synergies come into play, so we can create a lot of additional organic growth by adding now new users to the platform. And 87% of the revenues of Axis in Motion is generated via in-game advertising, by now also placing further ads from Dataseed, because Dataseed is a demand-side platform. Then we can also place a lot of ads directly by ourselves, taking out the middleman, create a lot of additional revenues. And that is also something which we have put together on the slide here. So that's our advertising synergies in action. On the left side, we see what we have done already in the past, directly connecting our demand side to campaign management tool with our games, placing the ads directly in the games by ourselves. No middleman anymore, driving monetization. That's the CPMs development, increasing it by 72%, which means 72% more revenues in the end. And that is also something which we work currently on for Axis in Motion, implementing our SDK, placing the ads by ourselves, and on top, creating a lot of additional organic growth via Dataseed through user acquisition. And that brings us to the financial performance, so the second quarter financial highlights. And as mentioned at the beginning already, despite macroeconomic headwinds, we saw another very strong quarter with very strong profitability. We achieved a 37% revenue growth with an 80% organic revenue growth, 78 million in revenues in the second quarter, which was almost on the same level like Q4, and Q4 is always the strongest one. So we see also that we will create a lot of additional growth in the second half year due to a lot of seasonality, Christmas, Black Friday, these kind of events, despite some softness in advertising spend in the market. We have achieved a 21 million EBITDA and a very strong EBIT also of 16 million, which then relates to 38% EBITDA growth in the second quarter, 47% EBIT growth, and also margins remain stable at 27% year on year, which was also planned. And overall cash flow was 21.3 million operating cash flow with a 92% conversion rate, also shows that we have been able to further deliver very strong cash generation. That brings us now to our segment performance, and here we have introduced a new segment reporting in the first quarter to also follow the transformation from a games company towards an advertising software platform. And here we now have the demand side on the left side, which is currently 10% of the group revenues. We want to scale in a perfect world, we would scale that to 50%, because then we cover the full value chain in-house. And that is currently growing with 104%, and thereof 76% is organic growth. So very strong, which is due to a new sales team which we have hired over the last 12 months, but also new product launches like Moments AI or Atom, which tackling in the end the current issues where the identifier is going out of the market. So that works quite well, and Dataseed obviously, which will also be put on the DSP segment, will also help further growth in the second half year, next to very strong organic growth. And then we have the supply side segment, which also includes our games, which deliver the data and the advertising space, which had a strong growth of 32%, while 14% were coming from organic growth. And here we saw a rather stable, in the end, ad spend, which is also in the net dollar expansion rate included of our existing clients, but we added a lot of new clients and therefore have been able to still deliver a very good organic growth. And that brings us to the long-term financial development, and especially in these times, I think it's also very important to look back a little bit where we're coming from and where we also are going to. And here we see that now for 8 years we have been able to constantly grow our revenues as well as EBITDA and EBIT, and therefore showing very strong profitable growth. In 2019-2020 we have diluted our EBITDA margin a bit because we entered the advertising market, but therefore now as we have scaled that revenue part, we now also going back to the 28% and have shown our revenue CAGR of 69% since 2018, and therefore also constantly outperforming our midterm financial targets, where we have a target of 25 to 30%. So overall, very strong, profitable growth of the MGI. Coming now to some further KPIs to increase the transparency also what delivers the underlying organic growth. And here we see that we have started with 15 million ad impressions, which we delivered to end consumers in the first quarter of 2020, and we have increased that just organically without M&A to 89 billion ad impressions, which we delivered in the second quarter of 22. On top, we did some M&A and therefore delivered a total 161 billion ad impressions. We saw a 60% year-over-year organic growth in the second quarter. Usually these ad impressions are also linked to revenue growth, but here the ad impressions are growing faster because currently the monetization per advertising space is going down because there's not as much competition and budgets anymore, and therefore it's not directly relating into revenues. Nevertheless, we take in further market share, and once the market bounces back, CPMs increasing, then we can also expect the revenues picking faster up than before. On the software clients, we added roughly 30 new software clients in the last quarter, which is also a very strong number, and is then also helping us to create a very good organic growth. And that's in the end also what we see in the net dollar expansion rate. So that's a cohort from last year that's very stable despite macroeconomic headwinds. And then we're adding a lot of new clients, leading in the end to a very strong organic growth. Coming now to net leverage and the interest coverage ratio. And here we see that from the last 5 years we traded always between 2 and 3, which is also our financial target. And we are now currently at 3.7 times, a little bit above, due to the fact that we had a lot of earn-out payments also for the King's Isle acquisition. And the clear plan is now to delever over time to below 3 times again. And we are very confident due to our increasing EBITDAs, free cash flow, that we can do this. And at the same point in time also a very important KPI, the interest coverage ratio, which is still at 4 times, and therefore we're still having very healthy credit ratios. That is bringing us to the operating cash flow and the CapEx development, and cash generation is a very important part of a company, and especially also in these times. We see here on the left side that we have improved our operating cash flow to 84 million on a last 12 months basis. That's a very strong underlying free cash flow after interest expenses of 54 million, and this is also covering the interest expenses multiple times. On the right side we see the maintenance capex, which is 10 million, which is a further development of our IP-owned games. It's very limited as we don't invest the 5 to 50 million to develop a game from the sketch and then launch it, so we rather license games, and therefore a limited maintenance capex leading to very strong free cash flow. And on top we have some expansion capex for also M&A transactions, which we did in the last 12 months. But overall, this will also be reduced over time now as M&A is not a priority. That is bringing us to our guidance, and we just recently have reconfirmed our guidance. There was a lot of companies also being active in our space, which have withdrawn from the guidance or has been reduced, or which were reducing the guidance. We reconfirmed it and still see 295 to 350 million in revenues, with an EBITDA of 83 to 93 million, which is strong compared to the previous year. And looking at the LTM numbers with 287 million revenues and 81 million EBITDA, we can see that we are almost there, and might be the case that in the next quarter we already have achieved our full year numbers. Then coming to the midterm financial targets, and here we also reconfirm them. While it's difficult to predict 2023, we truly believe that we can further grow with a revenue CAGR of 25 to 30% in the next 3 to 5 years, with an EBITDA margin of 25 to 30%, with an EBIT margin of 15 to 20%, and also been very confident that we delever to below 3 times again. And overall, we have outperformed these targets for 3 years in a row now, and therefore also reconfirming our midterm financial targets. That brings us to the financial key takeaways, and looking at our cash position, the diversified debt maturities, we truly believe and been very confident that we are well positioned to navigate the cycle. Plus, we have 70% of our ad revenues coming from the US market, which is way more recession-proof and robust than the European market now. 50% of our EBITDA is still coming from anti-cyclic free-to-play games, so people rather don't play as much AAA games anymore, where they need to spend 60 to 100 euros to buy such a game, and rather play free-to-play games where they then do microtransactions of 1 or 2 euros. We are positioned in 2 markets which are naturally hedge each other, and as mentioned also, strong free cash flows covering interest expenses multiple times. Diversified bond and debt maturities, we're confident to delever to below 3 times again, and also the earn-out liabilities, which we have in the company would on average lead, if they would come through, to a 25 million additional EBITDA for the full group. So therefore they could also pay over the next 3 years for themselves. And as mentioned as well, reconfirming our guidance. And that brings us to the last slide of the presentation, and that's our vision 2025. And here we have tried to put together also a more, next to the financial targets, also something where we as a management want to bring the company to. And the first one is actually the team, because top talent is the most important thing to really drive the difference in this world. So being one of the most desired global companies to work for, which means innovative, professional, no politics. And no politics is something where we really put a very strong key on, and also when we do acquisition, we always look into that there's a very good personal fit also with the team. Then the second one, becoming one of the top 5 worldwide leading edge software platforms, which means multi-format, multi-channel, but also transparent and open source. And the third one, delivering cool games to our players to keep them engaged, and also obviously to collect a lot of data to make sure that the advertisers still can do very efficient targeting. Then respecting our partners' values and delivering transparency to clients. Obviously a lot of games companies work with us, and we need to make sure that they really trust us, and in the end that we don't use their data to benefit to the benefit of our own games. And that's also one of the clear USPs in the market which MGI has. And we also give a very free kind of treatment to the games publishers, where can they decide by themselves what kind of data they provide to us. And in the end, they can decide by themselves what they do. And in other platforms, usually they need to upload all the data, and there is no free choice, and that is a clear USP for MGI. And then the last one, building a clear USP that differentiates, which is like products like Atom, but also the contextual targeting of Dataseed. Plus, we are also currently looking into white labeling our infrastructure and giving it to especially big advertisers and publishers, which then would pay a kind of software as a service fee, where we don't have a take rate then anymore, which would then create a kind of SAP or Oracle of the advertising industry. And that has been the presentation of Media and Games Invest, the recent developments, and now we are open for questions.
Thank you, Mr. Echt, for the presentation. So the floor is up to you now. Any questions from your side? Yes, please.
Hi, Paul. Couple of questions from my side. Can you maybe talk a little bit about the impact of the currency fluctuation on the OSG in Q2, and also how that maybe impacted their profitability? And then also another question is, I understand being a bit more defensive with the cash right now, de-emphasizing the M&A. So multiples obviously also compressed. I mean, is that a bit frustrating? Is there anything that might tempt you into some small deals in the next couple of quarters? And where in your value chain would you consider being active? That's it.
So maybe start with the last one in terms of M&A. So we have decided and also communicated now that M&A is not a priority, and that we first of all want to deleverage. We have also acquired the major assets which we wanted to have in-house, and therefore now the focus will be on organic growth, especially also on the demand side. And it's true that multiples currently coming down, also in the private market, but we think there's still 6 to 12 months further to go until we also will see that multiples might come down even further. And we have a very strong cash position of 125 million, even paying for the largest earnouts for the Kingside acquisition. So therefore, we are well prepared to navigate the cycle, but for the time being, no priority on M&A. Coming to the FX tailwinds, so we have a certain amount of FX tailwinds also on our revenues. 70% of the revenues is done in US dollars, and we report the euro. But on the other hand, also 70% of the cost is in the end done in US dollars. We have a very natural hedge in terms of currency gains and losses. And therefore, for the first half year, we had a gain of 700K in terms of currencies, and therefore that's balancing out on the EBITDA level, and therefore also not impacting the valuation of the company as such, as it has a very limited impact on free cash flow. Thanks.
Any further questions? Okay, we'll now take over for a moment. You're quite positive about the advertisement spendings of other companies, whereas if you listen to TV companies, TV channels, they say it's going to be a difficult autumn. Why are you so much more optimistic than others are?
I would not say we are just optimistic, but what we see is that overall our growth of the company is quite robust, and we have also a lot of products around Atom, Moments AI, and also the recent acquisition of Dataseed, which obviously will also help us to further grow even in a soft market. And now also in the second half year we see further seasonality coming from Christmas, and also from Black Friday and all these kind of holidays and events. And therefore, we expect for the second half year to also show further strong growth. And one thing I think which helps us in the end is that we have always been very conservative when it comes to our guidance, while other companies, especially US companies, have been a bit more aggressive, and obviously that helps us quite a bit now to reconfirm also our numbers and give a lot of confidence in the future development of MGI. Nevertheless, for 23, and that's most likely something we should do in the first quarter of 23, then giving the short-term guidance for the full year, as we have always done the last years as well, because then we have more visibility also on the full year. But nevertheless, that is something which we will then look together into in the beginning of next year.
Your market capitalization is about 300 million euro, but you're still just at the scale segment in Frankfurt. Do you have any ambitions to go up to regulated market, to prime market here in Germany?
So there is nothing which is decided or nothing where we currently talk about in terms of or no decisions to be taken. Nevertheless, obviously the relocation to Sweden is already the first next step in terms of governance as well. And as you could see, we're also implementing an audit committee, a remuneration committee, all the things which you always usually ought to do for the regulated market. So we don't rule it out, but there's also nothing planned at this point in time.
Any further questions from your side? This is obviously not the case. So I would like to thank you, Mrs. Liederton, for your presence and for your presentation. If there are still some questions coming up, I'm sure both board members are here for the rest of the afternoon, maybe also for some one-on-one possibilities, which you can also arrange at the desk of the EquityForum. Thank you very much.
Thank you very much.